So you've been doing 2% a trade for a while, but your account is not growing very quickly. I understand. Usually when you go on YouTube and you type in money management, people say you should be risking no more than 1% or 2% of your account per trade. Don't get me wrong, this is perfect advice for beginners. But if you're really looking to scale your account and make some real money that you can actually withdraw from and maybe live off of at some point in your life, you can't keep trading with the 1% or 2% per trade. Hello guys, welcome back to the channel. My name is Prince, and today I'm going to be showing you a very profitable money management system that you can use to grow a small account. So I'm going to show you how to exponentially grow your account while also limiting risk. Obviously, the more you invest in it, the more you are going to risk. But I'm going to show you how to limit your drawdown while increasing your equity curve. So like I said earlier, this is perfect for a small account. If you have a big account, maybe you don't even have to do this. It's a little bit more risky, but the risk is exponentially reduced just by the tactics that I'm going to explain in this video. So just a heads up, this is going to be more of a one-on-one interview type video because I did this video a few weeks ago with one of my one-on-one coaching clients. So hopefully you get some value from it, and then, let's get into it. Right now, you're doing a 2% money management system. So essentially, if you're trading, let's say you're trading a 10,000 pound account, right?
Yeah.
So account balance is account balance is 10 grand.
Yeah.
And you're risking 2%?
Yeah, two or mostly one, but sometimes I'll do 2%.
Okay, let's assume we're consistent, and so we say let's say 2%, right?
Okay, yeah.
2% of 10 grand would be 200.
Yeah.
Right. So you're risking 200 per trade, and then let's say we take a trade that is like a 3-to-1 risk to reward. Right. So 3-to-1 risk to reward ratio. That means on average you'd be making about 600 per trade. So that's what you're doing right now, which is fine. So the advantage of trading using this kind of money management system is that it keeps your emotion in check. So you don't go overboard. You know whatever happens, you're only going to risk 2%, right?
Yeah.
Which is good for you mentally, because even if you go to bed, you'd have 5 trades on. Worst case scenario, you wake up and you've lost 10% of your account, but you still have 90%. And even when you trade again, if you lost 10% of your account, you essentially lost a grand. So next time you trade, the disadvantage here is next time you trade a grand, you're only risking 10% of 1900. So you're trading with 190, right? So you're actually looking to make less than 600 pounds the next time.
Yeah.
Right?
Yeah.
You're gonna have to build your account back up again to 1,000 to expect to make any more, right? So that's fine, because if you're for a beginner trader, you make sure you protect yourself and you mentally, which is the most important thing, mentally, to make sure you're in check. You don't fuck up your mental stability. That's a good trade. But for more advanced people, which is where you're getting now, you need to, if you really want to grow your account, you need to have a different type of money management system. And the reason I say this is because with a 1,000 pound account or a 10,000 pound account, you can actually grow an account very, very quickly if you have a very good money management system. That is where the bread is.
Sure.
No one has 100 grand to invest in trading. Most people don't have that kind of money to start trading. Most people start with like 500 to like 1,000. So with this fixed ratio, right?
Yeah.
Let me not call it fixed ratio because that's not really what it is. With my money management system, win rate is, I'm sure you've heard it before, but win rate is not important. So what we're looking for here is to have an edge. What does that mean? So we're looking for a trading system that has, how do I put this? We're looking for a trading system that is going to put us at an advantage.
Yeah. Okay.
which is essentially what we have. So let's say, for instance, so I win at 65%, 60%. If you're like a novice trader and you hear me say that I win like 65% or 50%, you think I don't know what I'm doing, right? But the reason we're focusing on at least having an edge, because with an edge you can then exponentially make more money.
Yeah.
So what we're focusing on is just one, having a trading plan with an edge. So as long as you're winning more than you're losing, you have an edge.
Yeah.
And so number two, we focus on the drawdown. So we don't focus on the win rate. We don't care that we're winning 90% of our trades. If 10% of our trade is going to blow our account, it doesn't matter how much you're winning.
Yeah.
Right? So if you're focusing on the drawdown, so how much am I going to lose if everything was to go to shit? Like if everything was to blow up and the worst case scenario happened, what could happen to my account? Right? And how we do this is by what is your drawdown? I'm gonna explain this in a bit.
Yeah.
And then three, we focus on increasing risk to reward. You already know what this is, right?
Yeah. Yeah.
So you see me always harping on, if it doesn't have a 1-to-1, at least get a 2-to-1. If it's a 3-to-1, it's even better. Try to get a 4-to-1. See if you can get a 5-to-1. You see me always saying this. Anytime I see a trade doesn't give me at least a 1-to-1, I leave it, because anytime I take a trade that doesn't give me a 1-to-1, I'm eliminating my edge and I'm increasing the drawdown.
Yeah.
Right. So how do we do that? So drawdown is essentially, I've mentioned this before. So your drawdown is essentially how much trades do you lose in a row. So what is your average? What is your maximum drawdown?
Okay.
Right. So to get these numbers, you obviously have to have the numbers in like an Excel spreadsheet. And with that, what is your average drawdown? So what is the maximum drawdown that you went through in a row? Like say, if you backtested your plan for like say 2-3 years, what is the maximum drawdown that you incurred while you were trading that portfolio?
Okay.
Then what is your average drawdown? Average drawdown is not really as important as the maximum drawdown. This is the worst case scenario, so let's focus on this.
Okay. Yeah.
So maximum drawdown. So let's say you're trading for 2 years and you've noticed that maybe you could have a $100,000 account. Yeah.
Yeah.
You trade for 2 years and you only have like 1 week where you lose like 50 pips max. But then every once in a while, you get a week where you lose 700 pips. Right. So with this type of trading system, right, and the way that we trade as swing traders, we maybe take like 4 or 5 trades a week max. So 700 pips, 4 or 5 trades a week at 2% will only lose you 10% of your account. So maximum drawdown is what we're paying attention here.
Okay. Yeah.
Right. Cool. So what does that mean? So let's say if you've backtested your strategy, right, and you've noticed that the worst case scenario that could ever happen, or the maximum amount of losses that you could ever incur, was say 300, or let's just keep it a round number, so it's much more simpler. Let's say it's 300 pips, and let's say
is that in a row?
Yeah, in a row.
It has been a row. Okay.
And let's say it happened within 4 trades. So again, let's do the math again. With this money management system, you're only risking 8%. But with this money management system, this could easily blow your account because you're over leveraging. Well, not really over leveraging, but you're more exposed. That's the right word. But if you don't have this number, you don't really know how to. This is all going to make sense in a bit. You don't really know how to manage the drawdowns because you don't have this number. This could easily blow your account if you're just like, yeah, I'm just going to see what happens. So 300 pips with this money management system is fine. But with this money management, I'm going to show you now. With this one, this could easily blow your account. So let me just show you an example. So let me show you an example of my money management system. Okay. Let's say a 10 grand account. So account equity 10,000, right? And you have maximum, the drawdown. Your drawdown is 300 pips, right? You don't understand. Let me show you an example. So this is my money management system spreadsheet, right? So
Yeah.
this is week one. This is what I made. Week two, this is what I made. Week three, and it just keeps going like that. You see, this is the maximum. This is the drawdown week here. This is the drawdown.
Yeah. Yeah. Oh, okay.
This is a
Oh, yeah.
this is a green week. This is a green week. This is all fine. Making money is easy. It's simple, right? But what we have to look out for, that's why I told you to look out for these drawdown. We focus on the on limiting drawdowns because you see, this is 152 pip drawdown. This is 250 pip drawdown. This is where you can easily blow your account.
Yeah.
So if you have these numbers, you're confident that the worst case scenario, look, there's an even bigger one there. So I'm looking at this. Yeah, I have a 282, 260 minus 4, but every so often you get like a big 253, right? You don't know when they're gonna happen. Right? So in a row, my drawdown is about 350 pips. I know I have this number. I know this. How? From the spreadsheet, from the back testing, from years and years and weeks and weeks. Look, this is hundreds of weeks of data here, right? You don't have this. You don't have this. So I don't expect you to have this number to give to me now.
Okay.
When you know this, the game changes for you, right? I can send you this, by the way. Well, this is the spreadsheet I was talking about. But anyway, let's just let me just finish teaching you, anyways. So let's just assume that your drawdown is 300 pips. The third thing we're looking for, so we've established account equity is 10 grand, and that our drawdown is 300 because we have the data I just showed you. The third thing we're looking for is you ask yourself, well, how much drawdown am I willing to accept to be okay? How much drawdown am I willing to accept? If I know that my maximum drawdown is 300, how much percentage of my account am I willing to sacrifice 300 pips of drawdown for? So let's just say you say you want to sacrifice 20% of your account. That means 300 pips of drawdown cannot take more than 2 grand.
Yeah. Okay.
If the worst case scenario happens, you don't lose more than 2 grand. To make the math even easier, let's just say 30%, because the math is easier for me to calculate in my head. So 30% of that 10,000, 3 grand. So that means that if the worst case scenario happens, you don't lose more than £3,000, which is 30% of your account. So the way you calculate how much you're going to trade with, in other words, if you say, well, if the worst case scenario happens, if I trade back to back to back to back to back, and the worst case scenario happens that I'm going to lose 300 pips, well, what does that mean in terms of dollar or pound value? That means for £3,000 divided by 30%, £3,000, which is 30% of my account, divided by 300 pips, which is my maximum drawdown. Right? That means I can't risk more than £10. Where's the pounds? 10 euros, whatever, per pip.
Oh yeah.
Let me just show you 2 examples. So first example, we use the 2%, and we use the same account, right?
Yeah.
The 2% account balance is 10 grand, and you take, I don't know, let's say you take on average you take a trade that is 3-to-1 risk to reward, right? So 3-to-1 risk to reward, you're risking 2%. That's 2% of 1,000 is 200. 200 times 3. So on average, you're making 600 pips a trade, right? So now let's look at the new money management. So the new money management, you have the same trading account, right? And you've done the math here, and you know you're risking not more than 10 pounds or 10 euros per pip. And let's say on average we take, so this one we are just assuming that we take a 3-to-1 risk to reward, which is usually what we take in when we trade, right? Because I mean our average trade. I mean, let's look at the trade we took this week. We have one on Cadien. Oh, yeah. So let's say, for instance, this one is about a 1.7, right? This one here is about 2.5. So it's usually more than a 1-to-1 risk to reward. But let's just take an average and say 3-to-1 for this one, just for the sake of argument. But this one, we say we take an average. Instead of using risk to reward, we take pips instead. So the average trade that we take, what's an average trade we take? It's at least 100 pips. Most of our trades are more than 100 pips. Would you agree?
Yeah.
112. This is 100. So this here is 200. So especially if you're, this is the advantage of being a swing trader, because you know you shoot the long game, right? So, and you know, average trade is 100. Okay, so with this one, you're risking 2% per trade, right? But with this one, you're risking 10 euros per pip. So let's say you have a trade where that is, let's take this trade for instance. In this trade, you have the stop loss is 59 and the take profit is 102. That means if you were to lose that trade, you would lose 590 euros.
Yeah.
If you were to win, you would win, how much is it? 1,020. You see the difference. But also,
yeah, and it's a less. If you look at it, it's a smaller risk to reward than a 3-to-1, and it's still more.
Exactly. But also, but let's look at the downside. If this one, if you were to lose, you would lose. We already know it's 300, it's 200, right?
200, yeah.
Significantly less than 590. So this is why I said to you earlier that I didn't want to reveal this to you, because you can easily blow your account on one trade if you're not careful. This is why we need to have this number. And for me, what I do is my biggest drawdown is not 450, it's 350, but I give myself a little bit more leeway and I use 450. So do you know why I do that?
No.
Just because, just for, if there's any change, if there's any quick change in my trading system where a currency pair stops working all of a sudden, or it's not as profitable as it used to be, I can spot it quicker and it's not as devastating as it would be as if I'm so close to this actual number.
Okay.
Because this is the key here. This is what you rely on when you're actually risking this much in one trade. Right? So you need to make sure that you have this number, and you need to make sure that you do this calculation. And you need to make sure you're okay with this 30%. It's okay for you to say, you know what, I don't want to risk more than 10%. 10% of my account. Like, it depends on how prone to risk that you are. Some people put this number at 50%. In that case, it would be 1,000 divided by 200. I don't know what's that. Then it would be 3.3 per pip. In which case, yeah, essentially just divide this by divided the stop loss by the loss by 3 essentially. So here you would be winning about 300. And here you would be winning losing about 200. And if you had a £1,000 account, which would apply to you more, right?
Yeah.
All you got to do is just take out a zero.
Mm.
So whereas right now, so this is what applies to you right now. Right now, your account is about right around 1,000, right?
Yeah.
So every time you take a trade, you're probably making about 15 quid, something.
Mm-hmm.
But if you had the numbers on your trading plan, you could easily be making double that.
Yeah.
And don't forget, the more you win, the more your equity rises. The faster your equity rises, the faster you can risk, and the more you can make.
Yeah, exactly.
So instead of making 15 per trade, you make 30. The next time you trade, instead of risking 2%, maybe you risk a bit more because you have this number. Instead of making maybe 15 again, you make 45. Then before you know it, your account goes from 1,000 to 2,000, from 2,000 to 5 to 4,000. And I know it sounds like I'm selling you a dream, but we base this on numbers and real facts and actual trading plans, right?
Yeah.
So we already have you. You have a good trading plan that makes money.
Mm.
Your mindset has shifted, and I've seen that because this is the biggest one. I think I should actually put this in number one.
Yeah.
Having a mindset, having someone there to check you because you've had a couple of, you've had a couple of times where you were a bit like you were going off the rails there.
Yeah, definitely. Yes.
Which happens to everyone. I'm not trying to say, do you know what I mean? It happens to me even to this day. But because I've had so much experience with all this type of emotions, it doesn't really bring me down as it would like someone who's new, right? And then thirdly, it's money management. So when people say money management, they usually say, "Oh yeah, don't risk more than 2%." Well, that's fine. Well, what about the 99% of people who can make a living from trading 2% on a £1,000 account? They just left making 15 quid per trade for how long? How's that? At what point are you actually going to grow your account
Yeah.
to the point where you start making money from it?
Mm.
So this is the key right here. Do you see what I'm trying to say?
Yeah. Yeah. It comes with more risk as well, though, doesn't it?
It comes with more risk, but is it really risky? Because you know what you're doing, right? You have the numbers, you have all the information you need to take the risk. And if it doesn't work out, usually it's because you've done something wrong.
Mm.
Because trading is all about probabilities.
It is. Yeah.
So we've done this over and over and over and over and over again for years and years and years. It's very unlikely that all of a sudden all of this stops working. Not yet, anyways. I mean, look at all these weeks. These are years of data I have here. So I'm quite confident, and I have to be. That's the only way I can do this and be able to sleep at night. I have to be confident in these numbers, and they haven't failed me yet, right?
Yeah.
So don't worry, you will get confident in them, but you have to have them first because you don't have them.
Okay.
So I wanted to show you this because at some point they're going to feel like, oh, mate, I can't just keep making 15 quid an hour a trade. I need to find a way to, make more money, and then that's gonna drive you to start making silly mistakes, and eventually you're gonna lose more money instead. So what I wanted to do is just at this point to have this at the back of your mind, right? Not at the back of your mind, but just learn this and start to get these numbers together on your trading plan. If you can backtest one or two or three, so if you can just backtest one or two or three, and just slowly build up this portfolio and look at these numbers and build the confidence, you can be able to increase. I mean, this is just a play. This is just a play. Don't worry about all these numbers, but you can just see how, the money increases over just a few weeks. I mean, obviously these are not real numbers. This just shows you like an example of what you can do because you have the numbers, right? So keep doing what you're doing on that 2%, but just know that it gets better than this because I know, like I said earlier, I know eventually you're gonna get tired of making 15 quid a trade, and it will start to you start to get bored.
Okay.
Just know it gets better. You're gonna start making 30 quid on a £1,000 account. It is definitely possible, but you just need to not trade recklessly. You need to have the numbers and you need to know what you're doing.
Yeah. Yeah. Should I only take this sort of trade if I'm really confident in the trade then? Like, was it every trade I take?
No. Every trade you take should be a confident trade.
Yeah. Oh yeah. 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 True.
So You don't just take trade because it looks
There's,
good.
nah.
Like, say for instance, this trade right here, it doesn't really look that good. And even when I was taking, I was like, I don't know. It's not like a clean break above, but it's still broke and closed above, right? And then we took it. It's a high close. It gave me at least a 1-to-1 risk to reward. It doesn't look that good, but
I
yeah,
guess as long as you know your plan works, and you know your win to loss ratio is obviously more in the win side. Then yeah, using that money management, you can build your account quickly. Definitely,
yeah,
can
exactly.
you?
So win ratio is irrelevant. And this is why.
Yeah,
Even if you're winning at 50-50, if you're winning at 80-10, 10% of losses can still bring you down a peg and you keep running round in circles. You make $80, then you lose 160. You make 100,000, then you lose 120. Okay, this is what happens because people get very addicted to this high of, oh, I'm winning, and then they keep risking more and more and more and more, and then boom, they run into this drawdown, and then it just breaks them back down lower than where they started from. They can't understand why they can't get ahead
So
because
what happens when you reach your drawdown? What do you need to do then?
well, first of all, it doesn't happen that often, and the maximum drawdown rarely happens.
Yeah,
If you see, that's the worst case scenario of 450. I've never had a 450 drawdown.
yeah,
The maximum here maybe is like 250. The maximum that I've ever had is 350. But usually it's about 180 plus 59, 239. It's like, okay, I'm still for my head, for my mindset as well. Like, it's like, okay, cool. Am I looking close? Am I getting close to 350? No, it's only 253. The next week I had 148. Then I had minus 58. And then I had, 99, 21, minus 47, minus 37.
yeah.
That's why I'm okay, just like going 2 weeks without taking a trade.
Mm.
Because I know when they come, when it rains, it pours. Just like this week, I've had like 3 trades back to back to back, and I know one of them lost, but the other two are looking to make me 200 pips. And with this
Yeah.
money management system, I'm good with those 3 trades.
So do you always look back and see if that you're ultimately making more pips than losing pips?
Yeah,
What is it about?
which is I guess you could say the win ratio.
Yeah.
So my win ratio is about 65%. Uh,
Mm.
but I mean, it's not as important as just making sure that my drawdown is not messed up, and it's not as important. I mean, 72% because there's still ciphers and Gartleys in here. But my training continuation win rate is about 65%, which is nothing flashy, but we all know that that's not the main thing. Keep the main thing the main thing. Focus on increasing your risk to reward. So don't take trades that is like giving you 50 cents for every dollar you risk. That's stupid.
Yeah.
And then focus on limiting your drawdown. So if you can find a trading strategy that would only give you a maximum 38% drawdown. That is the holy grail right there. But this is what people don't understand. They keep focusing on, I have a 95% win rate. Well, what is the drawdown, mate? They have no clue.
Yeah.
And this is what will bring you down.
Can we save this video? Are you saving this video?
Yeah, it's recorded.
Yeah, because I'm gonna have to watch this back.
I've got you, bro.
Yeah. Okay. Ooh.
All right. That was a lot of information, man. You might have to watch it a couple of times over just to get the gist of it. But hopefully you guys enjoyed that. If you have any questions, definitely put it in the comment section below. And if you want to have a one-on-one chat with me, if you want to take your trading to the next level, you have some questions or whatnot, I have a link to my calendar in the description. Book a call, speak to me one-on-one. Guys, if you like this video, obviously like it, share with someone that's going to get value from it, and subscribe if you haven't, if you're new, And I will see you guys in the next one. Peace.